Joining us now is former FDIC chairman and chairman of Systemic Risk Council, Sheila Bair. Sheila, good to see you. Thanks so much for joining us this morning.
Thanks for having me, Maria.
Your reaction on all of this?
Well, world markets don't like trade wars, and so I think we've got some rocky times ahead of us. There's clearly a problem with intellectual property. Whether tariffs are the best way to deal with that's another question. I hope everybody can sit down and get this resolved and get a good path forward fairly quickly, because the markets don't like this uncertainty. You know, I do think that longer term China's interests and ours are aligned. I think China wants to grow its middle class. It wants to grow its domestic demand. It wants to reduce those trade surpluses and stimulate more demand within its own economy. So, and they want access to our markets. We want access to their markets. So I think there's some common ground in areas of leverage to get this worked out.
Yeah.
But clearly there's a problem with intellectual property. It's good he's tackling it, but I just hope they can sit down and get it resolved quickly, because it's not good for the world economy.
Dagan.
Sheila, it's good to see you. But again, it seems like, and this is the Wall Street Journal speaking as well in the editorial page, that a very haphazard, willy-nilly, disorganized, erratic approach. Because if we need our allies to come together and lock arms with us and take on China and their theft of intellectual property and them taking technology from companies that want to do business there, we need those allies, whether it's Japan, South Korea, and Europe. But instead, we slap on these steel and aluminum tariffs and then have to backtrack. And again, it kind of throws these very trading partners into a tizzy, if you will. So where's the logic in this approach?
Well, yeah, I don't disagree with you. I think tariffs are a very blunt instrument. They're having to backtrack now with a lot of exceptions. There doesn't seem to be a lot of consultation with their allies. So this and on intellectual property, which is a worldwide problem. It's not just a United States problem in terms of how China deals with intellectual property. So clearly some more coordination would be very helpful, but this is a very impatient administration, a very impatient president. He doesn't like to go through all those processes first, so it is what it is. But, you know, he certainly got everyone's attention, so let's hope people can sit down and have those kinds of discussions and reach some kind of agreement to get us on an orderly path.
Sheila, China came back with only $3 billion in tariffs. This was they did not load the guns and fire here. This was a very small response relative to what we expected. Do they just want to cut a deal? They want to get this done quickly, and that's why they're signaling this way?
Yeah, that could be. As I say, I think longer term, our interest, there's a lot of alignment with our interest. And I've seen some, I think, a little reckless rhetoric from some of the administration about we're going to end our economic partnership with China, which has really marked U.S. policy since the Nixon era. So longer term, I think our economies can benefit from each other. I think China recognizes that. I hope we do in the U.S. too. We've got to deal with this intellectual property problem, but I did take it as a positive signal as well. Absolutely.
I just want to point out something, though, that this a few $billion from China in tariffs, they're targeted. If you target pork, they targeted the very areas that voted for President Trump. They targeted farmers against soybeans, pork, hogs, and fruit. Those are the very areas. So they're trying to make it hurt politically.
That's very true. That's a very core constituency for the president. So it's a calculated move, but not in quantitative terms. It's not overly provocative, which I still view as a good sign.
Hey, Sheila, this is Gary Smith in New York. I want to ask you a more macro question, because it gets to the whole tariffs things and your former job as chairman of the FDIC. We think I'm a free market guy. That's my perspective. We seem to think that we get a bunch of smart people in D.C. and they can control somehow, like the Wizard of Oz, major economic policies. You know, the banking regulation, this whole trade, the targeted trade tariffs. Wouldn't we be better off, do you think, in the long term, just letting the free market work this out instead of relying on arguably smart people like you to try to maneuver the economy?
Well, I like markets. I like markets allocating resources. I think, this is one of the reasons why I've been such a passionate opponent of too big to fail. I think that definitely skews markets towards very large, inefficient financial institutions. So I do think that we need to let markets work, but it also means that we shouldn't subsidize certain types of activity.
Agreed.
And industry doesn't always like that. There's a difference between being pro-industry and pro-market, and I think that's really the kind of dynamic you're seeing in D.C. now, where both Republicans and Democrats really, you saw it in the tax bill, not much loophole closing, a lot of benefits to special industries that also skew resources towards those favored classes.
Yeah. Sheila, it's great to get your insights.
Thank you.
Thanks so much. Sheila Bair joining us there in Washington.